Philippe Houchois, equity research analyst for European and US autos at Jeffreries, joining us now. Can you walk me through what is happening here? Is this a management problem? Is this a strategy problem? Because once again, it is delayed and deferred targets that we're seeing really hammering the stock.
Yes, good morning. So I think in many ways the market expected what happened today in terms of resetting that the targets would be achieved later. So basically what companies said today, same target as we aspired to in 22, but only in 2023. And from there, the message has been a bit confusing on two fronts. One is, I feel like there's been a relatively slow recovery at Ferrari, as if they were constraining it to some extent. And now they're talking about slowing down or reducing their spending, which then reduces growth. But you kind of wonder if it's not the other way around, that the company's adjusting spending as growth is potentially slowing down, or at least the mix of vehicles they have in the order book may not be as strong as what they expected a while back. Mm-hmm. So I think it's more, we expected the pushback on the date of the guidance. The market seems to be confused about what is driving it or the explanations that go with it.
So if the recovery is not that strong for Ferrari, like the orders aren't in, where are the orders in? Is it that a macro thing, or is the money going to go somewhere else?
No, I think the orders are certainly in terms of when the company has been relatively open about the order intake, about the backlog of vehicles they have on their books. The question is how maybe you balance a backlog that is made of very high mixed products, high margin, and maybe also a backlog of relatively lower profit cars like the Roma or the Portofino, and you're trying to balance out the two, and that takes your volume down, or you could produce more, but you're trying to preserve your earnings.
Philippe, they're sticking to combustion engines. This is a company that feels very, very reluctant to let go. Again, is that going to be a problem? Is that going to be something that we're going to have to see huge catch-up with? Management at the moment doesn't seem to really have its eyes on the transition that others are making, for instance, over at Porsche.
Yeah, no, definitely. I mean, to be fair, Ferrari is in a different league from Porsche, and their issues are a bit different. For them, I think for a business like Porsche, you can see how there's a plan to make combustion engines a minority part of the business, on a reasonable time frame. I think for Ferrari, there is an anchor in combustion engines that will not go away anytime soon. So for them, it's a question of developing kind of a dual product strategy, some with much more EVs, but it will be a much larger exposure to ICE and for longer than for most other brands. That's part of the brand identity.
Philippe, with the stock getting hit so hard today, is that your opportunity to buy?
I think we've been careful on the Ferrari valuation for some time. You could see the returns on invested capital were easing down. The valuation was holding up as if investors expected a return to peak earnings and peak returns quickly, and it is taking much longer. So I think until we have a bit more visibility on what drives the way they are downgrading expectations, and until we have, I think it would be wrong for a business like Ferrari to give us explanations or targets until a new CEO has come in. That would be unfair to that new person. And so once we have a new CEO, then I think the company can probably revisit the strategy and reframe the strategy, whereas right now they're kind of going quiet and pushing back, but without reshaping what the future of Ferrari will be. That's up to the new CEO to do so.
They still make pretty cars. That's undeniable. Philippe, what did you make of what Infineon had to say today? This looks like it's going to be a problem on the chip side for really quite some time. We're seeing factories getting shut down across Europe. Ford, one of the latest companies to announce that. The sector's getting hit pretty hard today. Are you having to increase your expectations in terms of the impact that this is going to have?
Yeah, I mean, definitely, it's a more structural issue than the industry wanted to discuss a few months ago. I think some of the actors in the chip supply chain, including Intel, are probably having an interest in also sounding a relatively dire situation because they need to fund new investments both in the U.S. and in Europe. So I think there are two things. There's an existing capacity, and definitely there's some easing happening starting towards the end of the second quarter. But there is a structural issue of capacity, and by all accounts, it takes a good 2 years to actually it will take a good 2 years to normalize the capacity with decisions that are both economic and strategic on where to build that new capacity. It would be unwise for the industry to remain as dependent on Japan and Taiwan for most of their supplies. So discussion involved how do you build capacity in the U.S., how do you build capacity in Europe, and how much it's going to cost, how much subsidies are going to play a role in that new capacity coming on.